So this week, global markets finally got the news they'd all been waiting for. A big rate cut from the US Federal Reserve. But instead of everyone reacting the same way, we got chaos. We're going to cut through all that noise and find out what really moved the needle. Let's get right into it. Our guide through this is the weekly market wrap from Gembridge Capital. Now, it's packed with data, but the real story, the interesting stuff, it's kind of hidden in the details. So our job here is to pull that narrative out for you. And that brings us to the central question, the big puzzle of the week. The US Fed cut interest rates. In theory, that should send a really clear signal to everyone, right? But it didn't. Instead, we saw this messy, totally contradictory reaction across the globe. So what on earth is going on? To understand the week, you have to start with the one single event that everything else revolved around. Think of it like an anchor that really set the tone for all the other market moves we saw. And here it is, 25 basis points. The Federal Open Market Committee, the FOMC, cut rates by 25 BPS. This was, without a doubt, the week's anchor event. It gave a baseline of support for certain assets, think government bonds, and it basically set the big picture economic backdrop for everybody. And this is the most crucial point. An anchor can hold a ship in place, sure, but it can't stop the waves. So while that rate cut provided some stability, there was this storm of volatility just brewing right under the surface. And that led to some very, very different outcomes depending on where you were looking. Which brings us to our main theme, divergence. It's this simple idea that one piece of global news can trigger completely opposite reactions in different places. It's why one event wasn't good news for absolutely everyone. Okay, so let's start in the US. The rate cut did exactly what you'd expect for treasuries. It supported them, propped them up. But the stock market, that was a totally different story. It was choppy, it was mixed, and not because of the Fed. It was because of all the volatility in the AI sector, with huge names like Broadcom and Oracle making their own waves. It's a perfect example of a local story just completely overpowering a global one. And this right here captures the week's core conflict perfectly. On one side, you have this amazing resilience, with emerging market credit outside of Asia looking really strong. On the other side, you have this muddled, mixed picture in US and Asian markets. It's the same global event, but two totally different reactions. Okay, let's zoom in a little bit on those resilient emerging markets. The stories happening here have almost nothing to do with that 25 basis point rate cut. Nope. Instead, they are all about local politics, geopolitics, and company-specific drama. I mean, just look at these three completely separate narratives playing out. Ukrainian bonds rallied, and that was on positive news about a U.S. security deal. Venezuelan bonds were up because of speculation about an oil tanker. And then you have Gran Tierra Energy, a corporate story, where bonds just tumbled because of a negative review from Moody's. Three little microstories, and each one was defining its own performance. And then you've got Argentina, which was described as being firm amid volatility. Think about that. Despite all the global noise, the government there successfully issued $1.4 billion in local bonds. Now, in a market that's so often defined by uncertainty, that is a powerful story of localized resilience. Now, let's shift our focus and hop over to Asia. It was a bit of a mixed bag for stocks there, but the credit market, especially in some really surprising corners, was telling a completely different story, one of turnarounds and stability. So the Chinese high-yield property sector, it's been a source of anxiety for years, right? But look at this. Vanke was the standout performer. Bonds and stocks just soared on news of a new restructuring proposal. New World Development and Lyson also saw these huge bond rallies, not because of some macro news, but because they were making smart moves, like selling assets to raise cash. These are stories of self-help, not central bank help. And this theme of local resilience, it just keeps going right across the region. Sri Lanka stabilized, even though an IMF review was delayed. Pakistan held firm after getting its loan money. Even in Thailand, corporate debt was in high demand despite some geopolitical tensions. So once again, each market was just moving to the beat of its own drum. So after looking at all these different pieces, what's the one big idea that we should all walk away with? What is the real story from this incredibly complex week? It really all boils down to this three-step story. First, you have the stage. Big macro events like the Fed rate cut create the global environment. Then you get the show. This is where the specific local stories, like what we saw in Ukraine or with Vanke in China, actually drive the performance. And that leads us to the secret. The real story is always in the details. It's in the divergence between the big headline and what's actually happening on the ground. So, the crucial takeaway here is this. While everyone was watching the Fed, the real action, the stuff that really mattered, was happening everywhere else.
This week proved you just can't paint the global market with a single brush. The big story was divergence, which, of course, leaves us with the question, what will be the story next week? We'll see you then.